We have with us Peter McGuire joining in to talk to us about what's going on across world equity markets. Peter, it seems like investors are extremely worried that a deeply divisive election campaign in Italy could lead to a Eurosceptic government which could potentially prepare to break up the bloc. Very similar to what we saw with Brexit. What are the big fears over here? Because clearly global equity participants are sort of concerned and nervous. It's not just Italian or Eurozone investors right now.
Well, good morning, Selena. I think, yeah, absolutely. Fear seems to have entered the market over the last, couple of days, and the likes of George Soros and he expanding his thoughts, and then many other analysts. That's been demonstrated with the volatility, and of course with where the US dollar is, just under that 95 US dollar index. Gold's up, crude off solidly over the last week. All of these factors, and then the Dow getting wiped out overnight. So that's creating uncertainty. I think it's going to be a very interesting session today in Europe, and of course how Asia flows, and then what happens tonight with the Italians and moving forward from that sort of mindset.
Peter, last year was a stellar year for economic growth in Europe. I mean, we've seen resumption of inflation, those deflationary fears went away, and all of this almost happened in a flash. Now, of course, it seems like everybody is concerned about potential for deflation and even a potential for a contagion. Is that the kind of fears you have too?
I don't necessarily think I've got those fears, but I certainly have taken on board the landscape of Europe. And this, we saw over the last couple of weeks, the Turkish situation and the devaluation of the lira, and then moving that across now to where Italy sits. And could that be the start of, the Portugals and Spain's coming back into it? The pigs, of course, really hadn't gone away. We've backed ourselves in a lot of ways to the economic growth of Germany and to some extent France as well. And it's going to be a wait and see over this, Northern Hemisphere summer, how bad the situation becomes. We understand where Greece is, and Italy is, one would have thought, immune from this, but certainly over the last matter of, weeks and months, it's been a very tumultuous time for all concerned, and those are going to be major factors moving forward as far as bond rates and, of course, debt repayment.
Right, Peter, again, let me ask you a question from traders' perspective here. I think that perhaps is also going to give us answer about the Indian markets here. In terms of what's happening in the Europe right now, what's your own outlook on the euro? Are you expecting, because again, if the President Mattarella, again, if he announces that yes, perhaps elections are going to happen very soon, again, if that date perhaps could be coming in July, instead of a popular sort of belief day before yesterday, till day before yesterday of September to December here. So if that happens, what is the sort of volatility we're going to see in June and between in this week also here? And secondly, perhaps in terms of the way again, euro again is going down, dollar again basically is now almost approaching 95 as I'm looking at the screen here. What's the worst case scenario you're looking at in the next few days? Is the volatility is going to increase, or perhaps you think it's going to settle down here?
Well, I think first off that everyone's mind is very much centred on the Fed raising rates in June. If that comes to fruition, then we're going to see naturally a ratchet up to that US dollar and a further sell-off, one would have to say, for the euro. I take your points as far as the Japanese yen and what's happened there, and it seems to be the only thing that is, well, one of the only currencies that's actually appreciating against the US dollar at the present time. It was boosted the other day on late Friday reports as far as the summit in North Korea was back on. I'm conscious as far as where that US-Euro trade is. It seems to be one way at the moment, but I tell you what, there seems to be further upside from traders and their mounting positions. So that seems to be the general consensus from the trading public. Where it goes from here is going to be, again, that volatility comes into it. And if traders are long and they're seeing opportunity, and that seems to be the method and the madness at the moment, then that normally creates, more strength to that US dollar, and that's going to probably underpin the way it is at the moment. So the uncertainty is playing very well for traders, and I think that will continue, Piyush, in the next, matter of days and possibly over the next week.
So Peter, looking at such sort of volatility cycles, almost in the last 20 years, we have seen almost 4 or 5 times at least here, the big volatility cycles again, or I think more than that here. So in that context again, perhaps for the stock markets, because again we would be looking at the currency markets, we would be looking at the European markets here. So from that perspective, are you saying that perhaps volatility in the currencies, also in terms of stocks or currencies here, that's going to remain very high at least for the June month here, or you think perhaps this could be settling down after the initial sort of fall which we are going to see in the next 7 days here?
Well, I think so. I think that'll just continue to create that uncertainty, which in turn traders love. We need to be mindful that, you know, when you look at the perfect storm, this US dollar has been all over the shop in the last, year. And considering where it traded when Trump's inauguration, all the way from 103 down to 89, 88, and wasn't that long ago we were saying, there's a chance to get to 186 handle. Now it's closer to get the 96 handle. So that just shows you the sheer determination of that US dollar. And what's going on as far as the trade sanctions, what's going on as far as what Wilbur Ross is going to do in China as far as tariffs and so on. All of these factors come into, I think, creating turbulence and uncertainty in the market. And they're all the ingredients to create more havoc, which in turn traders and I think investors maybe enjoy, but also are fearful. And that could see a further sell-off, I think, possibly across those equity markets.
Right. Peter, what is the call on crude prices? The recent commentary from Russia and Saudi Arabia has impacted the crude journey upward. But let's not forget that it is in Saudi's best interest to keep crude prices elevated in that $70 to $80 a barrel. But more importantly, Venezuelan production comes to a halt. Crude could spike to $100 a barrel. Is that still the view you hold?
I don't think it's going to. I think it's a long way off till getting to 100. I think it'll be probably closer to get to, that low 60s as far as Brent. WTI is under that, that 67, 66 and a half sort of target range at the moment. It's been a solid sell-off, Samina, since the 21st. We're a bit, about 8 days, and considering that, the markets were shut Monday, Memorial Day, it's been a massive sell-off. And that going in conjunction with the strengthening of the US dollar, I think the traders are, short, and they're staying short at the present time. Hedge funds will probably, looking at getting out of positions if they're still long, and I'm sure they wouldn't be. These guys trade pretty quickly, so they're using all their algorithms and, momentum trades. So at the present time, this is all creating, again, more turbulence to the market, and in the short term leading up to that next OPEC meeting on the 22nd in Vienna. So that's only 3 weeks ago this Friday, and I think that the market was probably anticipating it would have seen that, $72, $73 WTI. Now you might be seeing 62. So that's where the market certainly is creating more potential downside at the present, Samina.